Hey there, future Wall Street wizards. Welcome to the thrilling, fast-paced world of the stock market. It's a place where fortunes are made and lost in the blink of an eye, and where every decision counts. But don't worry, we're here to guide you through it all. Kramer here, your guide to the wild world of the stock market. Think of me as your personal navigator through this financial jungle. Together, we'll explore the ins and outs, the ups and downs, and everything in between. Don't worry, we'll keep it simple. The stock market might seem complex, but at its core, it's all about buying and selling ownership in companies. We'll break it down step by step. The stock market is like a giant flea market, but instead of old lamps and vintage clothes, you're buying and selling pieces of companies called stocks. Each stock represents a small piece of ownership in a company. Think of it like owning a slice of your favorite pizza place, where when you buy a stock, you're essentially buying a slice of that company. The more successful the company, the more valuable your slice becomes. When the business is booming, your stock becomes more valuable. This means that if the company does well, the value of your stock goes up and you can sell it for a profit. When things are slow, your slice might be worth less. If the company faces challenges or doesn't perform well, the value of your stock can decrease and you might sell it for less than you paid. That's the stock market in a nutshell. It's a dynamic and ever-changing environment where prices fluctuate based on various factors, including company performance, economic conditions, and investor sentiment. You buy and sell these stocks on exchanges like the New York Stock Exchange or the Nasdaq. These exchanges are like marketplaces where buyers and sellers come together to trade stocks. It's like eBay, but for companies. Just as you would bid on items on eBay, you can place orders to buy or sell stocks on these exchanges. Exciting, right? The stock market offers endless opportunities for those who are willing to learn and take calculated risks. It's a place where knowledge and strategy can lead to great rewards. Now, let's dive in a little deeper, shall we? Buckle up. We're about to embark on an exciting journey through the world of stocks, investments, and financial growth. Get ready to become a savvy investor. Let's rewind a bit back to the 1600s. Imagine a bustling marketplace filled with merchants and traders, all eager to buy and sell goods. This was a time when the concept of trading was evolving rapidly. The first stock market popped up in Amsterdam. It was a revolutionary idea at the time, allowing people to buy and sell shares of companies. This was the birth of a new financial era. People traded shares of the Dutch East India Company, a big shot in the spice trade. This company was so influential that it became the world's first publicly traded company, setting the stage for modern stock markets. Fast forward a couple of centuries and the New York Stock Exchange opened its doors in 1792. Located on Wall Street, it quickly became the epicenter of global finance. Over the years, the stock market has had its ups and downs, booms and busts, bull and bear markets. Each era brought its own challenges and opportunities, shaping the financial landscape we know today. We've seen it all: the Roaring Twenties, a time of great economic prosperity, followed by the Great Depression, a period of severe economic downturn. Then came the dot-com bubble, a time of rapid technological advancement and speculative investments. But guess what? The market always bounces back. Despite the crashes and crises, the stock market has shown remarkable resilience, recovering and growing stronger each time. It's resilient, just like the American spirit. This resilience is a testament to the innovation, determination, and hard work of countless individuals and businesses. So are you ready to make some history? The stock market offers endless possibilities for those willing to take the plunge and invest in their future. Let's talk about how you get your hands on these stocks. Whether you're a seasoned investor or just starting out, understanding the basics of stock trading is the first step towards financial success. There are two main markets where stocks are traded: primary and secondary. These markets are essential for the functioning of the financial system, providing liquidity and opportunities for investment. Think of the primary market as the factory floor. This is where the magic begins, where companies manufacture new shares of stock, much like products rolling off an assembly line. This is where companies create new shares of stock and sell them to the public for the first time through an initial public offering, or IPO. An IPO is a significant event for a company, marking its transition from a private entity to a publicly traded one. We'll talk more about IPOs in a bit. But for now, just remember that the primary market is all about new stock being introduced to investors for the first time. Now imagine the secondary market as a giant used car lot, but instead of cars, we're talking stocks. This is where the real trading action happens, and it's crucial for the ongoing liquidity of the market. This is where investors buy and sell stocks from each other. The secondary market provides a platform for investors to trade their shares, ensuring that they can easily enter and exit their investments. The New York Stock Exchange and Nasdaq are examples of secondary markets. These exchanges are bustling hubs of activity where millions of shares change hands every day. It's where all the action happens. Prices fluctuate based on supply and demand, news and investor sentiment, making it a dynamic and sometimes volatile environment. So you're not buying directly from the company in the secondary market. Instead, you're engaging in transactions with other investors who are looking to buy or sell their shares. You're buying from another investor who wants to sell. Got it. This system ensures that there's always a market for stocks, providing liquidity and enabling price discovery. Remember those IPOs we mentioned earlier? Time to break it down. IPO stands for Initial Public Offering. It's basically a company's coming out party on Wall Street. They're going from a private company to a publicly traded company. Think of it like this. Your buddy starts a lemonade stand and it's a hit. Everyone loves his secret recipe. He decides to go big time and sell shares of his lemonade stand to the public. That's an IPO. He gets money to grow his business and you get a chance to own a piece of the action. Of course, real-life IPOs are a bit more complicated than that, but you get the idea. Section 5. Why go public? Show me the money. Why would a company want to go public anyway? Well, it's a great way to raise capital. That's fancy talk for money. They can use that money to expand their business, hire more employees, develop new products, or even pay off debts. Going public also gives a company prestige and credibility. It's like earning a gold star in the business world. And let's not forget about the original owners and employees who hold stock. An IPO can make them a lot of money if the company does well. But remember, going public isn't a walk in the park. It's a big decision with a lot of rules and regulations. Section 6, the IPO process from private to public. Taking a company public is like baking a cake. You need all the right ingredients and a whole lot of steps to get it right. First, the company hires an investment bank to help them navigate the process. They file a registration statement with the Securities and Exchange Commission, the market watchdog. Then they go on a roadshow, pitching their company to potential investors. If everything goes well, the company sets an IPO price and starts trading on the stock exchange. Woo, that's a lot of work. Section 7. IPOs. Not always a sure thing. Now, before you go all in on the next hot IPO, remember this. Investing in IPOs can be risky business. Not all IPOs are created equal. Some companies soar like eagles while others crash and burn. Do your homework, research the company, read their prospectus. That's like their resume, and understand what they do and their financials. Don't let the hype cloud your judgment. Remember, investing in IPOs is like playing poker. You need to know when to hold them and know when to fold them. Section 8. Don't be a yo-yo. Think long-term. One last piece of advice from your Uncle Kramer. Don't be a yo-yo investor, buying and selling stocks on a whim. The stock market isn't a get-rich-quick scheme. It's a marathon, not a sprint. Invest in companies you believe in, companies that are building products and services that make a difference. Do your research, be patient, and watch your money grow over the long term. And always remember, buy and hold, baby. That's how you build real wealth. Section 9. Keep learning. So there you have it. A crash course on the stock market and IPOs. We've covered a lot of ground today, from the basics of buying and selling stocks to the ins and outs of going public. But this is just the beginning. The stock market is a fascinating and ever-changing world. Keep learning, stay curious, and never be afraid to ask questions. And who knows, maybe one day you'll be ringing the opening bell at the NYSE. Now go out there and make some money. Booyah!